Hi, thanks for tuning in. Today we're going to review gaps, what they are, some terminology that we use, how we play them, what they mean, what they don't mean, etc. So first off, some definitions that I'd like to go over here. In my opinion, a gap is really whenever you open anywhere above or below the close. In my opinion, that creates a gap. Some people don't agree with that. That's why there's a definition of a true gap where you open outside the previous trading day range. So for example, like right here on January 6th, price opened up at $29. The day before closed at 27. So that's definitely a gap. The question is, what type of gap is that? You have a gap window, and this is the high or the low of the day the gap was created. So right here on January 5th, the high of that day is 27.56. That is your gap fill here. Your gap window would be the low here at 29.35. And then your true gap fill would be the close at 27.04, which is, where the close was the day before the gap was created. So, just try to keep in mind that some people don't consider it. It really doesn't matter. It's more or less, can you take the data and use the data to make money? So, no point in arguing over any of that stuff. So the four types of gaps that you see are common gaps, breakaway gaps, runaway gaps, and exhaustion gaps. In each of these gaps, what I'm going to cover is where you'll find them on the chart, where you'll find them in the context of the trend, how much volume and the volume profile that accompanies the gap, and on average, how fast does the gap get filled? Because you hear the term all the time, every gap gets filled. That is generally true. Some gaps just take a lot longer to get filled. So the chart we're going to look at is candidate growth, CGC. They've got tons of gaps, so it's a great one to look at and analyze. So you do see lots of common gaps, like right here, for example. That one was filled within a day, below average volume. Another one right here on the 14th, right? The open on this day, 1751. The close on this day is 1739. So, that's a gap. And these gaps get filled. That one took a week to get filled. Common gaps, there's not a lot of volume there, and they get filled very often. You get them all over the place. They're no clue to be gained of the direction of the trend, right? You see a gap here, you see a gap here, you see all these gaps here, but really look at the moving averages. They're going sideways. There is no trend. Then back in October, you get a breakaway gap to start the trend, triple, quadruple volume, and an expansion in price, right? She goes from 13 to 18 bucks in about 4 sessions, and then flags. This gap has not been filled and has not been challenged, and that gap at this point is 7 months old. That's a breakaway gap. It's on strong volume and really started this trend. It broke away from the trading range, that the high of this range, coming back to March of 2020. Right, so got out of that range, and then another breakaway gap here when President Biden was elected on the prospects of marijuana legalization. Lots of volume here as well, breakaway gap. This gap has never been tested. So what you're looking at here in the breakaway gap is really the start of the trend, evidence that buyers are piling in. And generally, there's some fundamental news associated with it. The runaway gap is found at the middle of the trend. It's where the trend intensifies, right? So at this point, 13 to 25, you've already doubled, and then she goes from 30 to 56, right? That's where all of the extra money was made in the runaway gap. It's when people that miss the breakaway gap pile into the trade. They don't want to miss the trade. There's Also, a lot of volume here, double, triple the average daily volume. And these do take a long time to get filled. I mean, this one here, January 6th, didn't get filled until March 5th and only was partially filled then. The full fill didn't come for quite some time. And then the exhaustion gap is the final gap that you'll see. You'll see that at the end of a prolonged, strong trend, whether it's up or down, does not matter. And it requires lots of volume. It's all the people in the auction that just have to have it. They don't care what price, they're going to buy it right now at the end of the auction. And when it ends, there's no one left to buy, and ultimately the trend reverses. And so, at that point, that's the end, right? The volume is there. There's no other type of gap that this could be. An exhaustion gap here, yes. It was filled the very first day, yes. Is this an exhaustion gap here? Possibly, but it could also just be a breakaway gap starting a new downtrend, right? So whether that's an exhaustion gap or a breakaway gap up here is irrelevant. The point is that you're going to see a gap up, and that gap will get filled, and ultimately a gap in the opposite direction is soon to follow, because there's simply a lack of demand and too much supply, too much trapped longs at that particular price range. So that concludes the 4 gaps. Just keep an eye out, right? When you do experience a big gap, take a look at the volume, take a look at the existing trend. Is there a trend? Are you reversing a trend? Are you at a top? Are you at a bottom? Are you testing a previous breakout area? Are you range bound? Are you within balance? Are you breaking out of balance? Right? All of these things will give you clues as to what type of gap it is, and then ultimately what the probability is for that trend either ramping up, intensifying, or ending in the example of an exhaustion gap. So if you liked the video, please hit the like button, comment, subscribe, hit the bell so you get notified when we put out new videos, and come on over to Twitter and check out the feed at Market Wizard 87. Thanks.